So today I am presenting class topic is accounting ratio. Especially this topic is prepared for class 12 students. And accounting ratio which we calculate uh, by using different formula and from the accounting information. The main sources for accounting information for calculating accounting ratio, the main sources of accounting data which I had discussed with you in my preceding video class, that is your financial statements. So mainly the sources of for data for calculating various type of ratios using the accounting data, that is financial statements, which are a balance sheet and profit and loss account. So these two statements are main sources for analysis and interpretation of financial statements. Using the various tools, different type of tools are there: accounting ratio, cash flow statement, comparative statement, comparison statement. Are these tools we use for analysis and interpretation of financial statements from different point of views. So what is accounting ratio? So we can say it in a different way. So if ratios are computed on the basis of accounting information, these are called accounting ratio. So that is, using the accounting information, accounting ratios are calculated, and accounting informations we get from the profit and loss account and balance sheets. Okay, and it can be said in another way also: the relationship between two accounting figures expressed mathematically is known as accounting ratio. Mathematically expressed. Okay, so this is a very simple meaning what is accounting ratio. Then you can write these answers, or you can write the answers, that is, if ratios are computed on the basis of accounting information, so these are called accounting ratios. Then next questions that you have to understand, that what is ratio analysis in from accounting point of view. Ratio analysis refers to the process of computing, determining and explaining the relationship between the component items of financial statement in terms of ratio. So here the financial statements, it is talking about profit and loss account and balance sheet. So this profit and loss account and financial balance sheets informations used for explaining, determining, computing, okay, a relationship, assets and liabilities relationship, long term liability, shareholders fund. So relationship we establish, and here it is the relationship between two accounting figures, assets and liabilities relationship. I will come on this point later. Now here another point is question, state the classification of accounting ratios. So accounting ratios are computed from various point of view. So these points are classified into four categories, that is here: liquidity ratio, solvency ratio, that is to know the long term financial position of a business, we calculate the solvency ratio. To know the short term liquidity position of the business, we calculate liquidity ratio. And to know the various assets used in the business, how efficiently the various assets have been used by business to know this, that is turnover ratio or activity ratio, and profitability ratio, that is analysis of profit and loss statement. Various expenses, gross profit, net profit analysis is done with the help of profitability ratio. Then liquidity ratio, you have to know. Question is asked, what is liquidity ratio? Then you can write from here one sentence, depends on marks. If it is 1 mark, so you can liquidity ratio bring out the ability of the firm to honor its short term obligation as and when they fall due. Short term obligation means current liabilities. So that means to pay the current liabilities, liquidity ratio is used to measure the short term obligation meeting capacity of the business. Now short term obligation, that is current liabilities. So current liabilities is paid out of current assets, and current assets are sufficient or not, that is determined with the help of liquidity ratio to pay the short term obligation, that is current liability is payable out of current assets, and that is here the firm to honor its short term obligation as and when they fall due. Another way, liquidity means ability of the firm to pay its short term debts in time. Short term debt in time means current liabilities. So liquidity ratio includes the following. So to know the liquidity ratio to liquidity position in a better way, so in accounting we calculate two ratios. One is current ratio, or which is also called working capital ratio. Another is quick ratio or liquid ratio or acid test ratio. So these two ratios are calculated to know about the liquidity position of the firm. Okay, so what are the two ratios we calculated under liquidity ratio? Then current ratio and liquid ratio, quick ratio or acid test ratio. These two ratios we calculate. Now what is current ratio? Coming here, current ratio. Here current ratio, it shows the relationship between current assets and current liabilities. It is calculated using the formula, this current ratio equal current assets divided by current liabilities. Now the total value of current assets divided by total value of current liabilities, then the results which we get, it is current ratio. And now normally used current assets are here cash in hand, cash at bank, which are also called together cash equivalent, cash and cash equivalent, sundry debtors, bills receivable, short term loans and advances, inventories, prepaid expenses, accrued income. These are few items which comes under current assets. Short term investment also you can write, short term investment, short term investment, buying of shares of another company for short period, short term investment. And similarly the few items under current liabilities which we are commonly used, for which we use commonly these: sundry creditors, bills payable, bank overdraft, cash credit, short term loans from bank, outstanding expenses, provision for tax, income received in advance. So these are considered current liabilities. Now the sum total of current assets divided by current liability, the result is your current ratio. Okay, so now here one problems taken. Current ratio calculation. See here, calculate current ratio from the following particulars. So formula you have to remember, current assets divided by current liabilities. Now from the given questions, what are the current assets, what are the current liability? Based on the above discussions, you have to segregate and aggregate the total of current assets and total of current liability and divide the first by the second. Here cash in hand, it is a current asset. Cash at bank, it is a current asset. Bills receivable, it is a current asset. Sundry creditors, current liabilities. Bills payable, current liabilities. Outstanding expenses, current liabilities. Inventories, current assets. Prepaid expenses, current assets. So now with this information, you have to calculate current ratio. Okay, now this is the question. So now here solutions. See the solutions, how it is prepared. Okay, this is current ratio formula, current assets divided by current liabilities, then current assets given in the questions. What are the current assets given in the questions? Cash in hand is given. Cash in hand. First you have to write down the items. Cash in hand plus cash at bank plus bills receivable plus inventory plus prepaid expenses. So this is your current assets items given in the questions. Now substitute the value. Cash in hand value is given 30,000 plus 20,000 rupees. Cash at bank value plus bills receivable value is given 10,000 plus inventory value is given 30,000 and plus prepaid expenses value is given 10,000. So when you aggregate it, so you will get 1 lakh. 30,000 plus 20,000, 50 plus 10, 60,000 plus 30,000, 90 plus 10, 1 lakh. So this is the total current assets value is 1 lakh. Similarly, current liabilities. So in the given questions, current liabilities items are only 3: current sundry creditors, bills payable and outstanding expenses. So here rupees 30,000 sundry creditors value given, rupees 15,000 bills payable value is given and rupees 5,000 outstanding expenses value is given. So total value is 50,000. So therefore current ratio equal 1 lakh divided by 50,000. So we have to calculate this ratio. So here this is ideal ratio, current ratio. This is the ratio every company they have to maintain. So what is the ideal ratio of current? The ideal current ratio, it is 2:1. So 2:1 is satisfactory. So this ratio is to be maintained regarding current ratio. Alright students, so you see here and copy it, and a similar one problem I have given you for your practice. Problem for practice it is written. So here the questions is given to you all for practicing. Then all of you write down in your copy and find out the current ratio in the same manner which I calculated above. Okay, very simple problem. So you have to learn one by one. All of you watch it, note down very slowly. I have explained you, so you will able to note down in your copy watching this video class. Okay students, thank you very much.